Great. Hey, friends. Good to see you today. And the friends I'm talking about seeing are just John and Jessica, not the rest of you out there, because I really can't see you. But it's Chris Miller with the National Coalition for Community Capital, talking with the two leaders of the very first diversified community investment fund in the country in Rhode Island, where small is mighty. Jessica, so great to see you and spend some time together. And Josh, same with you. It has been delightful to become friends over the last couple of years, maybe more than a couple of years now that we have been working together. And I wanted you to just maybe reflect a little bit on what that time was like, how you came to this idea of, we're going to build a fund, and loved it to hear. And again, just tell me what sounds really interesting. We're talking a lot to folks about the Rhode Island Fund because you were first and because you're out there raising capital. So you're in the real world now. This is not theoretical. And I think our folks would love to hear about what's happening with your work. So go take it away.
Sure. You want me to start, Josh, and you
Sure.
can jump in? Sure. Well, just thanks for having us. We're excited to be here. NC3 has been a great friend and supporter, and we definitely wouldn't be here without NC3. So, and without Chris in particular. Um, yeah, so we started doing this work in 2020, late 2020, early 2021. Josh and I had worked together in our previous lives, careers. He was in small business counseling, and I was in philanthropy. And we really wanted uh, to focus more around community wealth building and community ownership. So, how to take an approach to economic development and neighborhood community development that was very much rooted in, assets and ownership of assets. Um, and so we formed Local Return. It's a nonprofit organization with that mission in 2021. We started talking about local investment. How do we ourselves and also, others invest into financially into our own communities? And why doesn't that option exist? We brought Michael Schumann. He did a series of workshops for people. We got a group of people really excited around the idea. And then we looked around and realized there were virtually no local investment opportunities in Rhode Island, particularly if you're not accredited investor, which, we are not. And so then we thought, okay, well, we'll just pool our money, all of us together, and we'll go out and try to find some opportunities. How hard can that be? Um, that was our naive thought back in 2021, which then led us to NC3, and we found your handbook on community investing. Josh and I both read it cover to cover. I have mine over here somewhere. I still pull it out frequently. For a while there, where we were quoting you all the time. And again, we just thought, oh, we can do this. But that led us to you, and it led us to the Community Capital Accelerator program, led us to Brian Becken at Pathlight Law. And so we went down the route of creating a diversified community investment fund. And it took us, I don't know, a good 3.5 years, Josh, to get that stood up, just to the place of being able to raise our first investment. And that's where we are now, is really in the fundraising phase.
Terrific. So, Josh, I wonder if you can talk a little bit about the structure. I mean, I think most folks who know NC3 have some idea about the Diversified Community Investment Fund, but you also did your own spin by creating a cooperative. And if you could talk a little bit about that, I think that'd be interesting.
Yeah, so we incubated this for-profit public benefit corporation, the Rhode Island Community Investment Cooperative. We structured it as a cooperative, even though there's not technically a investment cooperative legal structure. It is structured as a cooperative where every investor, no matter how much they invest, has one voting share in the cooperative, is able to vote and be on the board. We have, and the investment committee that reviews the investments that we'll make. That was important to us from the beginning, that we build that structure for community voice and engagement straight into the process and straight into bake it into the organizational structure. So, and that, I don't know if you'd add anything else to that, Jess, about the. overall structure.
No, I think, just to say that that was really important to us. We, you know, as you know, Chris, the structure part is, I always think of it as like a two-part challenge. So figuring out the legal structure of the fund itself, and then figuring out the fundraising structure. So for us, some of the principles that were really important to us were, one, as Josh said, we really wanted community ownership, and in all the ways, like legal ownership, but buy-in, both financial and emotional and moral and social buy-in. It was also really another deal breaker for us was that unaccredited investors be able to participate. So those two things really, I would say, governed the way that we went about setting up the structure. So in addition to creating the cooperative, using the Diversified Community Investment Fund model, so with a focus on real estate, which really suited our goals very well because we're place focused. We have, specific communities in Rhode Island where we want to invest. They all have real estate assets, often which are not owned by local folks and are not being used for the benefit of local communities. So that worked really well for us. And then on the fundraising side, we chose to go with a direct public offering. So we're able to raise money from everyone in Rhode Island. That was a bit of a process to develop what that offering looked like, get approval here in Rhode Island to be able to raise money from any Rhode Islander. We are also doing a 506c offering for accredited investors elsewhere. But the way we chose to structure our fundraising is we have three types of stock. So we have the common stock, which is the voting share, which, as Josh said, every investor gets one. And then we have preferred stock, which is really the ownership. That's how folks are buying into the fund. And we have three series. The first is for what we call neighbor members, and that is folks who are from Rhode Island who would qualify as low income. And they have the lowest minimum investment, so they can invest for as little as $500, and they get the highest rate of return. So when dividends are issued, they get 100%. Then we have a community member, which I think of as like, everyday folks who, not super wealthy, but they have a little bit of money and they want to invest it into their backyard. That's a $2,500 minimum investment, and get 85% of dividends, so a little bit of a lower return. And then we have a sponsor level, which is for accredited investors, both institutions and individuals. So it's 5,000 institution or individual minimum, 25,000 institution minimum, and they get 70% of return. So we tried to flip that hierarchy of how investment funds usually work with, people who have more money getting more return. We felt that the neighborhood members are really proportionately, they're putting the most at risk, and they are more likely to live in the neighborhoods where we're actually investing. And we wanted them to feel like they had a real ownership stake.
Fantastic. And we love that. We advocate that kind of flipping the typical return paradigm really in all the communities we're working with. And, for some communities, wealth building for those least able investors is like the premier thing that they're really about. And so there's a lot of really interesting permutations that are happening right now in the communities we're working with across the country to figure out how do we do that. But the good news is that there are a lot of ways that we can make sure that we're really doing wealth building for those least able and that it's significant. So we're really moving folks forward in addition to the obvious benefits of ownership, where there is an opportunity to have an equity position and in a real estate project or a business or whatever the case may be. So what does the return look like? So what are you saying the return is going to look like? What does it look like right now as you've kind of penciled out what those neighbor investors are going to see in terms of a return?
Yeah, well, I can also give you a little update on where we are with the fundraising.
Yeah, I
So
would
we've
love to
been
hear
at
that too.
yeah, been at the fundraising. We're definitely still in fundraising mode. We haven't made an investment yet. We said that we wanted to raise at least $1 million before we deployed any money, and that is because we've created a pretty not complex, but a pretty well-developed, structured governance process where we have an investment committee of community members, along with some finance and real estate professionals who are developing, what does that due diligence process look like? And we want that process to have enough funds to actually like work,
Yeah.
and try it out. So so far we've raised $345,000, all community investor level. So almost all that middle series that I was talking about.
Mhm.
And we have found that, folks like that have really responded. We have, we knew that's where our networks were, that's where our strengths were. We also felt like it was really important to like prove out the concept to some of the larger investors and more
Yeah.
institutional folks. Like there are community members in Rhode Island who want this, who are willing to literally vote with their dollars for it.
Yeah.
And we definitely have seen that play out. So that was really our first year of focus fundraising. And in the last few months, we've shifted our attention, Josh and I, to more institutional accredited investors to try to bring in some larger investments.
Mhm.
And then more specifically, Josh, do you want to take, I feel you've really done
Sure.
more of the modeling.
Yeah. I think that we've talked about it in terms of positive financial return that sort of keeps up with inflation. But if you want the highest financial returns for your money, if you need that this is not the aligned structure for you. And we put that out on the table. So,
Mhm.
so, and that, yeah, I think that will turn off some people who are not, and that's fine with us. That's not really
Yeah.
if that isn't aligned for you. So it needs to have that positive financial return that keeps up with inflation. Our financial model builds that out of what the types of projects, the real estate projects that we'll invest in, the returns that we anticipate from that.
Mhm.
Another sort of big piece of this was creating the offering memorandum, to do the public offering. And so you can see all the different risks that we've laid out of that you have to do,
Yeah.
and that were important to do. But then, we really talk about it. I mean, we named, our effort local return, and it's because yes, we need those financial returns, but it's all the other sorts of returns, social and community returns, that are so important to us as well.
Great. Okay, that's helpful. And again, I broadly, we are also looking for that beat inflation below market rate, and
Yep.
all the funds we're building virtually, and for good reasons. We can't build affordable housing or workforce housing or low income housing for sure without having some substantial breaks, including lower interest rates and that sort of thing. Anywhere in the country, that's the situation. We also know there's a lot of impact investors and also impact investors in foundations that are looking for that same kind of return. And we are really excited about their interest in these funds as we're building them, because we see an opportunity to bring significant traditional but aligned and non-extractive sources of capital into this work. And so we'll be interested to see it. If you could talk just a little bit more in a little bit more detail on the governance piece and on the and on the investment committee piece, because that's one of the big questions that we always get, because in this space it was always, if you don't have a community of at least 50,000 people and you can't afford to spend 3% of your fund on fund management, don't bother to do it because you can't do it. And so we have been plowing ahead with the idea that that skill set exists in communities. I always take people back 75 years and said, who made these decisions then? Bankers, CPAs, investment advisors, and attorneys, and they're all still in your community and they all have the skill sets. So would love to hear a little bit of how that's panned out for you guys.
Yeah, we
Yeah, for
designed
sure.
that investment committee and that governance structure with that exact sort of thing in mind. It's funny you describe it that way, because the first time I started describing the work that we were doing to my father-in-law, he said, "Well, yeah, that's what banks used to do." And I was like, "Oh yeah, it is," right? And like you say, there is this knowledge, and we wanted to, before we dive into the nitty-gritties of the bylaws and all of that kind of stuff, we wanted to balance that, right? We wanted to take that knowledge of real estate and small business and finance that does exist in our community and
Yeah.
pair that with folks who have lived community experience, who are who know the community, because the kinds of lending that happens when that happens is the stuff that takes the balance that we're talking about, not just the
Yes.
financial returns, but what does this mean for the
Yeah.
communities that we're investing in?
Right.
And the more that sort of underwriting in other capital situations is removed from that, the more the sort of complexities of all the things that are good for community are lost, and it's just about the financial return. So that's a little more theoretical, but yeah, Jess, I don't know if you want to speak to the specific
Yeah.
structures and the bylaws.
Yeah. Yeah, and I would just add before getting into the specifics that I think it was also, we felt very deeply that it was part of our mission. This is where like the divinity school side of me comes out, but I think Josh and I both feel very deeply that it's also about changing some of the power dynamics that exist within communities around money and finance and economics, where people are made to feel like they don't know enough, or they're made to feel powerless. They're made to feel intimidated by these structures and these terms and this vocabulary that's thrown around. And we really see, part of our mission as building our collective community capacity within Rhode Island and our confidence, around these topics, so that, it's not used against us. And things aren't forced upon communities when the communities really should have a say. So a little more about our structure specifically. We have a board of directors that is, governing body. Right now, the founding board of directors was the founding board of local return. So we did that for purposes of expediency and getting the organization set up for the cooperative. We have written into our bylaws, and Brian Becken at Pathlight really helped us develop all of this, an investment committee that is, I think we say between 9 and 13 people, and the majority of them have to be residents of the communities that we have targeted for or prioritized for investment. So those are high poverty, high diversity census tracts in Rhode Island.
Yeah.
And then we also have a few finance, so folks who have done, community, more community focused small business development, small business investment, as well as real estate expertise. And that group's been working together for over a year now. And we started off with the basics. Again, we brought Michael Schumann in, and he did some basics around local investing and community investing. We've brought folks in just to do some like education orientation to really try to round out all of our knowledge about these various topics. We spent, I would say like the first half of the year really doing a lot of that, and then moving into, okay, so what does our investment policy look like? What does our due diligence process look like? How does a group make decisions or vet a deal when you're not looking at just the credit score or how much collateral is available? Like, what are the questions to ask? What are the things to look for? And so we've benefited from looking at a lot of other funds and impact investors, who do this work very deeply over time. And the way it will work is when we receive, we'll be open for applications. And when we receive applications, that group will do the review and make a recommendation to our board of directors, who will officially, vote on whether to move forward with the investment or not. We can also say a word about what we're prioritizing for investment, if does that make sense, Chris? So as I said, we really love this real estate focus, and the two needs that emerged to us pretty quickly as we were out in the communities listening and sort of doing an assessment of where there were gaps. We call it possibility capital instead of risk capital because we think it sounds better. But, how do we bring money to projects that wouldn't get it otherwise? If you can get traditional financing, go for that. This fund is for something different. So the two use cases that we're prioritizing are, one is helping small businesses own their property and real estate. Rhode Island, like I'm sure many markets around the country, small businesses often rent because they can't afford to buy early on, and then they invest a lot of money into their space. They're beloved by their neighborhoods. They're really anchors of the community, but they're at the mercy of landlords, number one, which often means getting high rent increases or getting kicked out, as the market changes, or they're just not building any wealth or equity through the real estate. And so we know Main Street businesses can be precarious financially, and that real estate ownership is an important piece of how they maintain wealth. So that's one, is helping businesses buy and own. And then the second is what we call sort of a neighborhood-based emerging real estate development. So helping people from within our neighborhoods who would not traditionally have access to real estate as a wealth building strategy for themselves and their families. I mean, like it or not, that's how most people in this country build wealth, is through real estate
Yes.
ownership.
Yeah. Well, exactly.
So helping them get into real estate, we have Local Return, our nonprofit side, has a training program that we brought here from Philadelphia called Jumpstart, where it does a 15-hour, basically a boot camp, and then it surrounds the participants with networking and mentorship to help people break into this field, which is really specialized and very risky. And cost money. So the idea is that the fund will come alongside and be available, for folks who graduate from that program, who are therefore de-risked because we know they've received some education and they've got a support system around them, and can apply to the fund for loans for that early, what is often like friends and family money, or personal wealth risk money,
Yeah.
but not everyone has access to. So those are the two
Fantastic.
things that we are
Yeah.
prioritizing.
I totally love that. I was in Macon, Georgia a few weeks ago. They're actually looking at putting a diversified community investment fund up there. And they have done exactly that in downtown Macon. So in downtown Macon, the businesses who are in those buildings, they have helped them. So more and more of them are now owning that hard asset that also produces other income for them and really does strengthen that. So
Exactly.
that's a genius way to do it. They've done a phenomenal job in Macon of that, and I'm sure you guys will do a phenomenal job in Rhode Island. So, well, we're about at the end of our time. I know that one of the things that we have coming up is that we're going to be at the Just Economies Conference in April together. And so talk a little bit about that, and then we'll sign off. And thanks so much for doing this, guys. We really appreciate it.
Yeah, I think you're stuck with me for that panel, Chris. And we're going to be joined by someone from one of the other DCIFs, I think, too, right?
Yep, the Lansing, Michigan DCIF, the real estate developer who brought us in, Brent Forsberg, is going to be there. And also one of our colleagues at the Urban Institute, Brett Theotis, who is heading up a local investment ownership office, basically, at the Urban Institute, is going to be there and give us a broad background and why people are even talking about this right now. So we're
Yeah.
really excited about that. And if you're in Washington, D.C. for that, make sure you come and see our session, because it's going to be great, because Jessica's going to be there. So,
Oh, yes. And I'll say that Josh, that same week, I think it's the same week, will be at the Main Street conference,
oh,
Main Street
fantastic.
America conference in Tulsa.
Yeah,
Um,
yeah,
yeah, so if you're at that conference, find Josh.
Yeah,
yeah,
this
for
work has
sure.
brought us into several different national networks, and there's so much overlapping kind of stuff. The Main Street America
Yeah,
conversations, very much
yeah.
about owning main streets, and the jumpstart sort of stuff that we're doing as well. Yeah,
Yeah,
excited
no,
about
I love those overlaps. Well, in fact, Macon, Georgia was Main Street America in 2024, so they were the #1 Main Street in America.
it.
So I'm sure
Oh, I thought
you'll
it.
run into them there so as well. So,
Yeah.
well, again, terrific, folks. Thanks so much for doing this. I really appreciate it. It is great working together with you. We're super proud of what you've done, and we want to wish you nothing but the very best and the very good work you're doing. So, thanks again. Bye
Thanks,
bye.
Chris.
Thanks, Chris.